Let's move on to the housing and economic market update. Now, as you see that the existing home prices in the United States average had gone up 15.8%, but on the West Coast had gone up the most by 0.1%, 20.6% compared to the Northeast region, 20.5%. But Midwest and the South region are not too bad either. They are still double digits at 13.6% and 14.2%. Now, a lot of people ask, is there going to be a market crash? And we had mentioned quite a few times previously from our previous webinar is that we really don't think there's going to be a market crash. A main reason is that people have a lot more tappable equity in their houses right now. So even if they are struggling, they are able to sell their home and still be able to make money. So as you see that right now, the equity in their homes is even more than back in 2005, 2006, right before the market crash. So it is truly, I'm not worried about the market crash at this time. And I thought it would be really interesting to share this. This is from the UCLA Anderson School Economic Forecast webinar. And they had shown us is that the California Cumulative General Fund revenues, if you look at the fiscal year of 2019-2020, of course, as you can see, is that when the pandemic hit or the shelter in place hit, it definitely had gone flat. But then as soon as 2020 starts and 21 starts, you could see that they all had gone up actually above last year's, mainly because this is really an indication showing that the high-tech companies in the California actually is doing pretty well. So that's why that the general fund revenues, they are still doing, they still have more money than last year. Please do subscribe to our channel and like our video, as we have spent quite a bit of time to put together all the research and share with you exactly what's going on during this past 30 days. And then here is another chart that they had shown, they have shared with us. And I thought this is absolutely very fascinating, is that he was showing us in 1990, the aerospace contraction of the Los Angeles rents had fallen by 14.3%, and the home prices fell by 3.5%, while employment fell by 3.5%. Now, 2001 dot-com bust, at the time the Bay Area rents fell by 25%, home prices fell by 2.4%, and employment fell by 7.5%. But if you exclude the leisure, hospitality, retail, and other services and education, which are the sectors have gotten affected the most in this pandemic, the employment actually fell by 10.1%, even more in 2001 dot-com bust. Now, if we fast forward and look at 2020, the pandemic recessions, Bay Area rents have fallen by 13%, around 13%. Home prices risen by 2.9%, but I feel like maybe this is a really big area that they're averaging, because I'm pretty sure it's more than 2.9%. But employment fell by 8.8%. Again, if we exclude those sectors that have been hit hardest during this pandemic, employment is actually only fallen by 2.5%. So as everyone leaving California, this is one of the charts that they had shown us, is that really California is doing pretty well. And again, with this whole mass exodus news everywhere, from San Francisco Chronicle, they actually did some data analysis. You will see that out of all these numbers, like people are moving around, 84,000 people are actually moving within the Bay Area. So the way they track it is that they actually look at those residents who filed for change of address during the March through November 2020. And then 24,000 is just moving anywhere elsewhere within California. Well, look at all these other numbers. It's just like over 1,000 people, Washington's a few hundred people, Nevada, Oregon, Texas, Colorado, and Idaho. But these are, very small numbers. So it's really not that mass exodus that people were talking about, especially considering how many millions of people we have here in California. And what about the new venture capital investments? If you look at the money, where the money is that you'll see that a lot of these new venture capital investments during the second half of 2020 is still in the Bay Area. So their conclusion is that It is still all about the pandemic, but there's no mass exodus from California. The job loss remains concentrated in the human contact sectors, so like the restaurants and also retail sectors. And the tech, logistics, and housing show strength, and California state government revenues continue to grow. So where is Bay Area housing market heading then? Now, the increased vaccinations means that more sellers are going to feel more comfortable to list their properties. But at the same time, that means more people will make travel plans for the summer. And which means if you're looking for homes during the summertime, maybe there will be less competition because a lot of people been cooped up inside the house with their kids doing virtual learning. And now when they are starting to get vaccinations, they definitely want to go out. But during this time, it does not mean that the market is going to crash. It just means that you probably will see less competition. I honestly don't think that the pricing is going to drop. I do think that the competition may not be like right now 20% over asking price in a lot of places. Maybe it will be more of a modest number, single digit percentage increase over the asking price, and then maybe just less than 10 people, 10 offers that you're competing with instead of the ones that we see 20, 40 offers that we're seeing. What about the residential loan updates? If you look at the 30 years Freddie Mac 30 years fixed rate, it has gone up from last month, has gone up to 3.02, and then we went up to 3.18 this past week. And then the projections from these different agencies now, Freddie Mac, Fannie Mae, Mortgage Bankers Association, National Association of Realtors, Fannie Mae and Mortgage Bankers Association actually have adjusted their projections and had gone up quite a bit. So if you average all four of them, they are pretty much going up about 5 to 12 basis points. So now the 2Q 2021 average of all four is about 3.05%. 3Q would be 3.1%. 4Q of this year is going to be 3.22%, and then next year is going to be around 3.32. However, I just kind of want to remind everybody is that when I first started buying properties at the time, we were paying 6, 7, over 7% for mortgage rate, and for 3% is half of that. So it is still very, very low. Even when we were having about 4.25% mortgage rate at the time, just a few years ago, we used to say that is historic low. So I don't mean to scare everybody saying like, oh my gosh, the interest is going up now, but it definitely has effect on your monthly payment. And this is also one of the reasons why people are really trying to get into the market as soon as possible, because these interest rates, you may not be able to get it again in the future. But who am I to say, right? We did go from 4% where we thought it was the lowest, and then we dropped down to 3. But still, I think if you are able to hold the 3% for 30 years, and the long term, even if you needed to rent it out, you might still be able to positive cash flow. So this is absolutely a very attractive mortgage rate. Now let's talk a little bit about commercial real estate market updates. We do our webinar and also housing market update every second Wednesday of the month. And we do live webinar from 4 to 5 p.m. Pacific Standard Time. So I hope you can join us. Now, if we look at the national housing market, the rent payment tracker, we'll see that this is actually based on the first 6 days of every month. And when they track it, they're comparing last year, 2019, 2020, and 2021. So if we're looking at April, 2019 was 82.9% that they were able to collect the rent. 2020, obviously it dropped, but then 2021, it had gone back up 79.8%. But just wanted to remind everybody that this is again tracking just the first 6 days of the month. And then typically if they track again for the entire month, it goes back up to 93% collection. And here is from Zumper, tracking the rental amount for the San Francisco metro area. And if you look at the Redwood City, it dropped 29.3%, Santa Clara 28.7%, and Sunnyvale dropped 31.7%. These three cities had dropped the most in terms of one bedroom rental rate from a year ago. However, good news is that if you're looking at San Mateo from last month, it had gone up 4.5%, Pleasanton 3.4%, and Vallejo 4.1%. And Vallejo's been doing really well this even throughout this pandemic. They've been having very affordable housing market and also the rental market. If you look at their year-over-year percentage, they also had gone up. They are pretty much the only one that has a positive number, which is 5.5%. But if you compare one bedroom and two bedrooms, you definitely do see like it seems like the two bedrooms are doing a little bit better than the one bedroom. And then here are some interesting thinking that you can kind of rationalize. Why is it that 1 to 2 bedrooms rent decrease is a little bit more than the 3 bedrooms or more or the single family housing? Now, for 1 to 2 bedrooms, the demographic a lot of times could be like because the students are going back home during this virtual learning period, so they no longer need to rent these 1 or 2 bedrooms. And then the lower income tech workers, they also decide to move to a lower rents area. While the renters with no children, they can easily move to lower rent areas until they are required to go back to the office again. So they just kind of like temporarily move out until they need to come back later. While the larger apartment units with 3 bedrooms or more, typically they're rented by renters with larger households, and it's harder to move everyone. And especially if they have children, it is really important for children to be within the community, like my children. So it will be a much bigger decision factor to move away because it's going to be considering different schools and stuff like that. So that's why we don't see the 3 bedrooms rental prices drop as much as the 1 to 2 bedrooms. Now, Marcus & Millichap have these great market reports from 4Q 2020, and they made some comments about the different commercial real estate sector markets. They said that apartment, in terms of apartment for San Jose area, they said long-term outlook bright for apartments, short-term performance murky. Industrial properties outperform as online shopping persists during extended lockdown. And the retail extent of damage to San Jose's retail sector still elusive. Investors take a cautious position, while dispersed office inventory may attract firms migrating away from densely populated urban centers. And as you see in this chart, that the vacancy rate has gone up quite a bit to over 11.5%. And this is talking about vacancy rate, meaning they actually moved out, not talking about where they are working in the office space or not. I mean, actual having people working in the office is even less, even higher percentage. But what we notice is that way more people are looking for smaller office spaces. So the smaller office spaces is still very popular, but then as you grow larger, that's when it's really hard to find tenants and also or buyers to buy these offices. Now, we would like to talk a little bit about what's been going on in the regulations, residential rental regulation side. CDC just extended the national eviction ban through June of 2021. It was supposed to end in March, but they just extended to June 30th, 2021. And also in California right now, they Assemblyman Alex Lee had actually proposed this AB Assembly Bill, AB 854, regarding ELLS Act. This is a law that protects landlords' right to leave the rental housing business. And also with the ELLS Act is truly allowing some of the landlords, especially the larger, the developers who purchase these properties, and then they might want to completely rehab, and then later on have to, if they might have to bring the tenants back in here. So the AB 854 is really prevents speculator evictions under the ELLS Act, and is the strongest tenant and rental housing protection bill in the legislature this session. So I think this is a very interesting topic, and this is why if you are interested to learn a little bit more about the residential rental regulations and what you can do to help voicing your opinion, you definitely need to click on our next video where we had invited a very prominent attorney in San Francisco to talk about these different regulations and what you should pay attention to, because that might affect your real estate investments.
Subscribe, people.